So today we had Tesla stock close in relatively at the same price that it closed on last Friday, which is very unusual for a Monday. Now today we got news from Japan where if you go ahead and just translate it from Japanese to English, you'll see that in Japan, Uber is buying 100 Model Ys to go ahead to add to its Uber fleet in Japan. And if you go to X.com, you'll see that a lot of the Tesla bulls are raging that this is a significant development for both Uber and Tesla. But one thing I want to clarify is that although I myself am bullish on Tesla in the long term, something that separates me from a lot of the Tesla zealots that you'll see on X.com or on YouTube is that oftentimes they take, any minuscule news and kind of perceive it to have much more value than it really does. Now, going back to this tweet that we saw on X.com, I could definitely understand the bull case and how obviously Uber having more individuals riding around in a Tesla in Japan could persuade individuals in Japan to eventually buy a Tesla. And, riding through the city in a Tesla is essentially like a billboard to advertise for Tesla. At the end of the day, it's really just only 100 vehicles, 100 Model Ys, and it's not something that has much substance for Tesla's value. Now, although this was a very slow Monday with the overall market kind of moving sideways as well, one of the things I've highlighted to the Push and Profit private group is that we have a major week coming up with so much data. For example, tomorrow on Tuesday, we have the job openings report. Then on Wednesday, we have the ADP employment. On Thursday, of course, initial jobless claims, and then ending off on Friday with the unemployment rate and US hourly wages. So this week is absolutely jam-packed with an influx of incoming job data that we absolutely are going to want to parse through, as it's really going to go ahead and define and kind of shape where the current state of the economy is. See, one of the reasons why we want to pay attention to the job data is because we know that the Federal Reserve is going to be watching this job data as well, because one of the things that the Federal Reserve wants is to see the labor market stifle. And although we're seeing trends in inflation kind of trickle downwards, we're still seeing this robust labor market that makes the job for the Federal Reserve in fighting inflation a lot more difficult. So Kashari, who is currently a voting member of the FOMC, which means that he has a huge influence on monetary policy, has recently said that while there hasn't yet been widespread job losses or a drop in wages as the Fed seek to turn down the heat on the economy and its too tight labor market, some softening in the sector should be expected, he said. He also said, I personally don't think that's realistic, that we're going to end this inflation cycle with no cost to the labor market. And so going back into this week's data, one of the things we kind of want to see is we don't want to see the labor market still scorching hot, because this is going to give a signal for the Federal Reserve to go ahead and continue hiking rates to, of course, fight inflation. And of course, that's going to have a ripple effect into the economy and also into the US stock market. Now, one of the things I want to point out is that if we take a look into the QQQ, which is the NASDAQ index ETF, we see that we're kind of approaching the peak of where we were at back in, December of 2021. So we've rallied massively so far this year, but we may be heading into this area where there is a peak. In fact, one of the things I've highlighted to the Push and Profit private group is that we're already seeing stocks like Microsoft show this kind of double top pattern where they recently hit the peak that it was back in 2021 and is kind of showing signs of reversing. Now, for those of you guys that don't know what a double top looks like, here's a quick image. Now, quick plug, I also want to highlight that if you guys are interested in joining the Push and Profit private group, where every single day you get an update on my insights on the overall market as well as trade ideas, make sure to check out the first link in the description below, because today is the last day for the coupon code for 30% off, which expires tomorrow. But with that said, I want to go ahead and hop into my laptop and talk about a couple of other things that we're seeing with Tesla and of course the overall market. Alrighty, so we are officially in my laptop and we're taking a look at Tesla stock. Now, as I pointed out earlier, the news or the headline news today with, the information from Japan about Uber buying the Tesla vehicles, 100 Model Ys, I mentioned that it wasn't something of any significance. Otherwise, we wouldn't have seen Tesla move relatively flat. Yeah, we kind of sold off, we rallied, and then, obviously came down. But this is all intraday. If you kind of just zoom out, we pretty much closed just a little bit higher than what we did last Friday. And so that's why I always say we have to look beyond the headlines and really pay attention to the data that's going to really have a significant role in shaping the direction of the market, right? And so what data is that? Well, that's going to be the influx of job data the influx of the critical job data that's coming, right? One of the things I say is that we want to stay data driven. And, obviously this is a week that you want to stay more data driven than ever, right? So obviously I mentioned, on Tuesday we have, the release of the job openings, and this report plays a crucial role in kind of unveiling the number of vacancies in the economy, acting as like a mirror reflecting the state of the labor demand and by extension economic health, right? And so, a surge in job openings could imply a blossoming business environment and fresh employment opportunities, which points towards a robust job market, right? In contrast, a downward trend might suggest an economic contraction, right? And so, generally, right? And so I want to highlight this because it's really important. Generally, you want to see, job openings actually increasing, because that means that, okay, we have, a demand for labor and we need people to work. But in this case, it's very unique, right? Because, the trend that we've been observing is a decline in job openings. While conventional wisdom may interpret this as a negative signal, the continuation of this trend could be a boom for the market under the current, economic climate that we're in. And the reason being is because the Federal Reserve, they're kind of watching over these figures and they want the robust job market to soften. And so if they see that the robust job market is softening and kind of going in his favor, well, the market's very forward looking. So they're going to say, okay, well, that means we're kind of going in favor of the Fed. It's less likely that we're going to pause or hike. And then that means that coming in the next FOMC rate decision meeting, that the Feds may pause. And the market's going to anticipate that as, very bullish, because obviously the market doesn't want rates to get hiked. Why? Because when rates get hiked, well, now just financing or just borrowing money is just more expensive for businesses, right? And so, for the past, I'd say 15 years, we've had this easy money policy. Let's go to a monthly chart. I would say pretty much right after the great financial recession. Well, actually, I'm looking at the Tesla chart. I should probably look at the S&P 500 just to give us a better image of what I'm talking about. So pretty much from let's go to here, right? So pretty much after the great financial crash that we had, from this whole entire era, we basically had an easy money policy, and you could see how having low interest rates has a significant impact on the market. It's very evident, right? Low interest rates, and what do we see the trend for the market, right? And so the reason I'm kind of showing this to you guys is because we have to pay attention to the other data points. I know sometimes people think, well, okay, what the Feds do, it doesn't have that much of an impact on the markets. Yes, it does. We see that things just rallied up. Now, of course, over here we had 2020, right? That was the pandemic. Obviously, we know that markets cooled off. And obviously, before then, around over here was when, in December of 2018 was when we had Jerome Powell, kind of slightly increase the federal fund rate just a bit. And the market kind of panicked at that time, right? But it continued going up. And then, of course, right over here, we reset back to 0% interest rates. And what did we see afterwards? That's why we saw this big rally in 2020 all the way to 2021. But, as we went to 2022, right, we pretty much saw the most aggressive rate hike cycle that we've seen in decades. And so what did we see? We saw the market kind of fall down. And so that's why it's important to really follow these trends in monetary policy. It's not just because I want to be, up to date on what the Feds do for no reason. There's reasoning behind it, right? And so kind of going back to Tesla, one of the things I've also mentioned to the Push and Profit private group is that we're kind of having this descending trend line. And I've been kind of suggesting that I think a lot of these tech stocks, especially Tesla, Microsoft, a lot of these tech names have been overextended. And one of the issues with a lot of these companies that have, rallied up significantly is that we have earnings, right? And the thing is, you have to live up to your expectations. When you have, a lot of these stocks rally upwards, once earnings comes, you have to face the music, and you have to, show that you're worth this amount, that you're worth this price. And so kind of going to the QQQ, again, a lot of or I guess it's 7 big mega cap stocks have rallied significantly, and we've seen that the earnings for a lot of these stocks have pretty much been cooling off. I mean, let's go back to Microsoft. Even though they're beating earnings, one of the things I say with earnings is that there's a lot more nuance than just beating the expected revenue when it comes to earnings, especially because a lot of these earnings have already been revised downwards. So it's not too insane to see a company beat its earnings when its earnings have already been revised downwards. And then, of course, the forward guidance is also something that's important. And what we're seeing from a lot of these companies is that, obviously we're feeling the effects of these rate hikes, and we're seeing consumer, purchasing weakening, right? This is why I pay attention to economic data, like I showed in the previous video, showing that savings for a lot of Americans is pretty much depleting. And so that's kind of bleeding into corporate profits. And that's why going forward, it's not looking like a good sign. And so although I'm bullish on Tesla in the long term, we may see Tesla continue cooling off. Now, I've highlighted in multiple videos that, I'm going to want to pay attention to Tesla around the $200 level or the early $200 levels. And I say that it doesn't have to go down there, but if it does, the reason why I want to look at this area is because we've seen that in the past that has been an area of support and an area of resistance. And we see that there's a lot of volume relative to price around that area. And so, of course, if Tesla does fall down to that level, well, I want to see, does it hold up around here and start reversing back upwards? Was that the bottom, or do we of course break below it? And so obviously, from an investing standpoint, if we see, Tesla fall down to that area, well, and show confirmation of an uptrend bouncing up, well, I'm going to want to deploy more capital and kind of add into my long-term position for Tesla. Again, I'm bullish for Tesla in the long term. I think going into 2025 all the way to 2030, Tesla is going to show that it's still dominant in the EV market. I mean, we've seen a lot of individuals say that these legacy automakers are going to really hurt Tesla, but then we've heard from the recent earnings, right? If we kind of zoom in, the reason Tesla rallied up this day was because the earnings from Ford was pretty bad from their EV business, right? They mentioned that they're actually losing more money in the EV side, and they're actually pushing out their projections for their EV production numbers. So, Tesla's still in the lead, and that's why I'm still bullish on Tesla for the long term. It's just that, we have a lot of macroeconomic data that's kind of suggesting that, going into 2024, it may not look very optimistic. And so that's why in the short term, in my separate trading account, I'm going to be trying to look to take advantage of Tesla going down in the short term if it does fall down to this level. Now, today, there wasn't really any, great moves. Of course, if you're looking at the intraday, you could have seen this as a mini rally upwards and then this going downwards. But in reality, it was a very flat day in comparison to, days like this where we're pretty much going upwards the whole time. And so I didn't really make any trades for today at all, right? I've had a separate video recently released where I talk about what days I like to trade in my short-term trading account, with Monday being one of the biggest days. But when you have Mondays that are relatively flat like this, it's a good time to sit out, for as far as being a trader. Yeah, we kind of fell down, but then we rallied at the end of the day. I mean, we're really not making any big moves. And so it's okay to sit out on certain days, especially if you're trading in the short term. I think as we get deeper into this week and we start hearing this, economic data with the job data incoming, well, that's when we're going to start seeing the bigger moves, and that's where we're going to start kind of shaping where we're currently at with the economy. So that's kind of just my views on Tesla short term, kind of bearish, right? Of course, that could change at any moment, as there could be any catalyst news or anything that comes up. Again, one thing that I'm waiting for is just an update on the Cybertrucks with the pricing. That was a big disappointment with the earnings. We didn't hear anything really for the Cybertruck. So hearing that could cause Tesla to kind of pop up, but I don't think it's going to be something that has any long-term effect. And I still think that in the short term, things may still continue going downwards. Again, I could be wrong, and at the end of the day, you have to only trade or invest in whatever you see value in, and not just blindly copy whatever anyone else says, like Kathy Wood or myself or anyone you see on CNBC, etc. Right? You have to obviously do your due diligence and see what is it that you see value in, right? For example, myself, You know, if Tesla does fall down and show signs of bouncing back up, I see value in adding to my long-term portfolio. But as a short-term trader, if Tesla does come down, that's an opportunity for me to short. Again, guys, I wanted to keep this video very short, sweet, and concise. Make sure to check out the links in the description below. Take advantage of that coupon code before it expires. And with that said, I'll see you guys on the next video. Take care.